Hi, this is Paul from globaltradingsoftware.com, and this is a Forex trading tutorial. I'm using the cradle to grave bundle plus also the range breakout. I wanted to show you a setup that really can work for you to help you understand behavior. I've got multiple time frames on this chart setup here. I've got the 3 minute, which is a great time frame for trading with the xBratAlgo. The 5 minute, very similar, but also then the 10 minute where we use the xBrat range breakout. So understanding the behavior right from, this is New Zealand dollar, US dollar, great traded through that Asian session sometimes, but not all the time. And we're going to look at that first chart here first and understand where I've put these support and resistance zones, why I've put them, and why I didn't trade the range breakout to begin with. So we always look left on these charts, and we can go back and we can go back on the hourly time frame, and we can see right now we've got some real strong support. So we always trade the range breakout on the 10 minute, so we can see this support at this point here. So when we get this range breakout for the Australian Stock Exchange, again New Zealand dollar, US dollar, sometimes really great trading there in that Asian session, we'd get the ASX labeled in red. So we are looking for shorts. However, we've got this major support, and on that hourly time frame we're verging on that double bottom, and we don't really want to go short here, so we're not looking for that short. If we're looking for long positions, the range breakout bias has to go green. Okay, so we can see at this point during the Asian session we went red to yellow, which is sort of neutral bias, back to red, back to yellow, then we start to go green at this point. I put a vertical line on this point here because this is very key for those smaller time frames, so we can understand that now it's breaking out of that Australian opening range, which is good for us. The bias on the opening range is green, so we're only looking for those longs, but we've got some resistance up above, and that resistance is quite strong because we've got to go back and look left back to the 14th of December here, and we see this pivot here. This pivot tests the top of the zone, so I've drawn this zone in here, and then recently after the Australian Open we test that zone again. So if we're going to go long either for the range breakout or better still an xBratAlgo on a smaller time frame, we've got to make sure we're going to clear that. So it's about understanding on multiple time frames what's happening. How did it react with that Australian Open? Again, a lot of the time any data for New Zealand or Australia is in that time zone, so that opening range is very important. It did go down and there was a bit of a trade there, but in reality, if you're a serious sophisticated Forex trader, you really need to understand longer term this is a big support, and it's got to gather some real good momentum to get through there. So that range breakout trade is always fraught with danger. Coming back up from there though is always a little bit more in your favor if we can get through these resistance zones. So again, vertical line there. Remember, on this vertical line we see that the opening range bias turns green, which is really good. So let's just take it on the 3 minute here, on or just after this vertical line where we saw that range breakout and the range then moving to that bullish sentiment, we get a 6-star buy signal. Now with the xBratAlgo usually would go long just above that 6-star buy, but again in all of the videos that I talk about we look at the previous support and resistance zone, so we can't go long. That's the rule until we clear this stuff. So what we're looking for really is an entry above here. Okay, and you can see how it attempts to break up above twice after that 6-star buy there. Now let's go to the 5 minute. Again, we've got 5 6-star buys coming closer into that session. We don't want to enter above there, so we're getting multiple confirmations from two totally different strategies. The xBratAlgo on two different time frames, the 3 and the 5 minute. We've gone on the 10-minute, we understand that range breakout bias has gone to green, so we're looking for the long. The long actually finally triggers after the gold pit open for Europe here. Okay, I'm going to put another vertical line in, different color. That's when it breaks there. So let me just change that to white for a second. So then I go back to the range breakout. We can see here the European open for gold is this opening range here. We are bias on this New Zealand dollar, US dollar. We're bullish bias on that opening range because it's printed in green already. So we're looking for a breakout of this range, which is where we had the entry for the 6-star buys on the 3 and the 5 minutes. So everything's correlating together that we're going to get that breakout to the upside, and we did. Go back now to the 5 minute. How do we manage this trade? We've got the entry, we've got a stop. Now different traders take different stops, so you know, for me, I'm reasonably conservative, and you know, in reality for me, I would probably start that stop below this support zone. Okay, that's just me personally. A lot of people will be quite tight underneath this manager ribbon here, but that's just me. That's where I'd place my stop. Now, the next thing really is to manage this trade, and we use the manager to do this. The manager looks at volume, average volume, and also we can see the bias for the manager here for this current time frame, where we are right now. But one of the things we look at is the volume. So we see green and grey candles. So a green candle is what's called an accumulation candle. So that has more volume than the previous candle, so there's more bias. A grey candle is an up candle, but it has less volume than that previous candle. So, and you can see the ranges of these candles start to slow down here. One of the things we always look at as well is these cyan dots above the candles. These are higher than average volume. When we get a little pullback just here, these are lower than average volume, so we don't tend to worry too much. And then we start to move up again, start to run out of juice a little bit with a low and average volume, then we get higher than average volume. Now, once we get to this sort of point here, and I'm going to put another vertical line on here, because when I'm looking at this, I'm not just looking at one chart, I'm looking at 3 charts. I'm looking at that 3, the 5 and the 10, sometimes the 1 as well. So I'm just going to put another vertical line on this candle here, because this is important to me as well. I'm going to colour that in red, because we have an indecision doji with higher than average volume. That's a point in which the manager is saying, really, you need to tighten your stops here. So during this move up, we can just sort of stay underneath this ribbon to this point, you know, to this point here, something like that. But then the options are for us on the 3 minute, for example, is we could have the manager turned on to aggressive, because this is a 3 minute time frame, and we could use this as an aggressive. So I'm just going to change that to day trading aggressive. Now you can see the ribbon changes a lot earlier. So once we start to get this indecision at this point here, we are already turning red on that candle. So we can say to ourselves, right, let's take our profits at this point. This actually is 4 candles ahead. So if we look where we are in real time right now, we can see we're 1, 2, 3, 4 candles ahead. So if I look at this point and count 4 candles back, 1, 2, 3, 4, we're getting out higher, we're maximizing our profits because we've turned the the manager to aggressive on that 3 minute, purely because we've seen on the 5 minute and on this 3 minute we've got higher than average volume in decision doji. It could go either way, so let's turn the manager to aggressive and maximize those profits, and that's what we do there right now. Okay, 6-star short coming in here. Do we take that? There's a lot of reasons not to take this trade. It's worked out as it has, because we've got a 6-star sell here, entry here, stop just above that, and we get a little 1-to-1 down there, and it's continued to go. But this is where the manager comes into its own. If you'd have taken this trade into this support, which is, you know, it can be a difficult type of trade, but you could make it risk-free reasonably quickly. So when we look at this sort of entry, we get the 6-star sell and we go short just underneath that candle. The long is just above the candle. Okay, let's be ultra aggressive here. We know we don't really want to go short into support, but if you want to go, that would be your stop, and your risk to reward would be around about 1-to-1. There you go, 1-to-1 into that support zone. Not a bad little scalping type trade, but then you can change your mind once you're into this trade. You see how the manager, see, we get a bounce off that support, but it's lower than average volume. Then we get a red candle, so that's a distribution candle. There's more sellers. Then we get another red candle, even more volume and higher than average volume, pushing down into this support. Then we actually come through. You see how the ribbon on the manager is getting wider and it's red. It's saying stay in the trade. So once we get to this support, we can actually make our trade risk free. We've already made a fantastic trade on the long. Now we're looking, can we go short? Yes, 1-to-1, but don't be too hasty to actually take that profit on the short. Make it risk free for sure when it gets to that support. Then let it move through. Once we've got a couple of candles closed through there, wait for this particular candle to close, we can then start to lock in profit with a trailing stop just above that support zone. In reality, probably wait for that ribbon to come down through that point and then adjust your stop, and that way we've managed to gain that momentum. Now look at the bias and look where we're breaking out short. The bias on the opening ranges is now red. Remember, we're taking the trade on the xBratAlgo, but we're actually looking at this on 3 different charts, 2 different strategies, and then we're managing it with the manager. So the xBratAlgo works extremely well. We're backed up by that opening range breakout. In fact, this first long, it was an opening range breakout for the Gold Europe Open, which is a fantastic time to trade Forex, without a doubt. Lots more traders start to come on, lots more volatility. So this one was a combination of an xBrat range breakout, long for the Gold European Open, plus also, if we look back, remember, we'd already had the signals for the xBratAlgo on the 3 and the 5 minutes. So it was backed up by two totally different strategies to go long New Zealand dollar, US dollar. We did it. Now we're short. So hopefully this helps. You know, when we're trading Forex, we should be looking at that multiple time frame strategy, understanding that behavior. The manager really helps you, let you understand that behavior to maximize those profits. And then signal generators with the xBratAlgo is fantastic, but also understanding those opening ranges where there's lots of volatility, whether it be the London Stock Exchange Open, the Gold Europe Open, or the ASX Open. Those ranges are really, really important to us, not just at that time when the range opens, but also during the rest of the session, because they really do. And the xBratAlgo range breakout actually helps you understand the sentiment, the bias of that opening range at that time. That's why it changes color. So, you know, when we get that short signal on the xBratAlgo here, let's move that red vertical line. we can see we've gone from yellow to red bias on the opening range. That backs up this 6-star xBrat short signal. So we're good to go. We just need to be very aggressive with the stop to make it risk-free when we get down to that support and resistance zone. You can see it here on the left-hand chart, a lot clearer on the 3-minute here. And this is what we took the trade off, the 3-minute. So we got a great signal, but we were backed up by that bias on the opening range. We were very tight on that trailing stop, and now we're a couple of candles down close below, and the ribbon has gone down just below the high of this support zone, support and resistance zone. So now that's where our trading stop is. So great trading opportunities. It's about mixing time frames, but also looking at different types of strategies. That xBratAlgo range breakout not just is a good trading strategy, but also that range continues for the rest of the day, and the bias of that range will help you with those xBratAlgo trading opportunities. Hopefully this helps. Speak to you all very soon.